I'm back to Forex Basics. Daryl Lane here, your vagrant trader. And in the previous video, we covered fundamental analysis. And now we are going to discuss protecting your capital, which probably should have been first because most people just risk way too much than they need to. But when it comes to protecting your capital, you really want to look at your trading from the standpoint of understanding that you do not want to risk more than 1 to 5% of your total account balance per executed trade idea. Okay. So what that means is if you were looking to place a trade right now, you would need to understand how much are you willing to risk for your overall account balance in order for you to determine what the stop loss parameter needs to be, and then also what your actual risk parameter needs to be with regards to what you're putting on as a trade. Okay, so a lot of times when within our system we use the Fibonacci tool, which basically is a measuring tool to help us understand the uh, the amount of retracement that the market has taken within a specific position. So, for example, if I was looking to figure out where I wanted my target to be, it would be above this 0 0 here, and my stop loss would be below here at this 110. So this is where I would actually set my stop amount. Now, depending on what my account balance is, I now have to understand how much of a risk am I willing to put onto this trade to create the profit that I want. So what I can do is if I know I have a, let's say you have a $1,500 account and you don't want to risk more than 3% of that account, then $45 is going to be your whole risk on your $1,500 account. So then you have to understand from here to here how many pips would you be willing to lose so that you don't actually you don't lose more than the $45, right? So we're gonna just measure this here with the date and price tool, and we're gonna measure once this lets me go. Oh, come on. So this here is 20 pips. Okay, so let's say if our entry was down here, we don't want price to break past 20 pips below our entry or we're out of the market. So then we have to think, okay, well, how many, if we know it's 20 pips, we need to know what's the actual lot size or micro lot size we need to use in order to be able to determine what our position should be. So I like to use this calculator right here, which is known as a Forex pip calculator. So basically, if I'm trading the British pound, Japanese yen, British pound, US dollar, I don't want to go past 20 pips. So I'll put in 20 pips here. So this is $30. So I know that I could go point. So point 20. All right, 0.23. So 0.22. 0.22 would be the most that we could risk when we place our actual order in the trade in order for us to determine how not to lose the total amount that we don't want to lose if we're wrong in our idea. Now, our projection for our profit target is more than the 20 pips. Okay. So what that means is we know that based on what we're trying to accomplish with this specific trade, I need to move my picture out the way real quick. With this specific trade, we have an actual target of above this 0 0, right? So because my target is above the 0 0, which my fib is set up to show me what my target is, my actual target is 250 pips. So I'm risking 20 pips to create 250 pips in profit. So now I'm risking $45 to create $550 in profit. So that is a great risk to reward ratio here. Typically, we want our reward ratio to be a 3 to 1, which basically means we're willing to risk $1 to make three. This actually puts us in a surplus, which is a good spot. But overall, as you're looking at your risk management, your key is to make sure that you're not risking more than 3 to 5% per trade as you do so. We also discuss placing our stop loss and then understanding our position and sizing. Another thing you can do to help you with your overall protection of your capital is to keep a journal. By journaling your trades, journaling what you were thinking, journaling what you did, journaling the outcome of the trade will also build up a muscle memory or emotional memory of what you were thinking, what you were feeling, but also what the market was doing during that time frame, so that as you gain a bank of those experiences, you can start to also use those as help for how you can help keep your capital safe and protect your overall account. So thank you so much for listening in this conversation. And the most important thing I always want everybody to understand is you're just one trade away. You are one trade away. And if you're open to learning how to trade the markets and gain more insight from a technical analysis standpoint, a fundamental analysis standpoint, understanding market sentiment, and knowing how to use the tools, the technical tools that are available to you so you can make proper, informed, and profitable decisions in the trading market, hit us up, vagranttradercollective.com, or on Instagram at Vagrant Trading Academy, or on Instagram at Vagrant Trader Insights. We're also on TikTok, same thing at Vagrant Trading Academy. Look forward to working with you if you decide to join us, help us out, build the community, and really make impact. So thanks again for listening. Take care.